Welcome back to Barry Charles. Yes, your one-stop shop for everything finance. And today we've got a great one for you. PayPal. PayPal has been crashing to the bottom of the hill, but is it about to take flight and fly back up again? The stock has been ravaged in 2023. Is it time to buy or is it time to walk away? Well, you're going to find out in the stock analysis. We're going to look at the key metrics of PayPal. We're going to look at what the future holds for PayPal. And if you stay right to the end, I will give you intrinsic value for PayPal right here, right now. Remember to like and subscribe to the channel. Let's get to it. Yes, welcome guys and gals to the PayPal stock analysis. Yes, we're going to look at all the key metrics right here, including revenue right here, right now. So if we're looking at the revenue of PayPal in 2022 was 27 billion. Now it's expected to slightly go up in 2023, but nothing outstanding. And the positive about this one is continued to go up and up and up the last 6 years. So that's very positive news for you as the investor of PayPal or looking to invest into PayPal. But on the net profit side, not so convincing. 2.4 billion in 2022 is expected to bounce back in 2023 a little bit. Not fantastic there. But overall, it's been like this sort of a wavy chart all the way through. So it's not very consistent. And that is one of the concerns why people have been walking away from the stock. But obviously, one of the key reasons they're walking away from the stock is that there's more and more competition coming in, and that is Apple Pay. It's just easy, just off your Apple phone, use your own thing. It's all connection. Boom, boom, boom. Thank you very much. And obviously Square, the Cash App, has been absolutely carving up and been the number one in the world for, well, the US for sale. So Cash App has really been flying. But PayPal has Venmo and PayPal, obviously, and as well as Braintree. So there is some positives for PayPal out there. The earnings per share is pretty much 5, but 4.95. The PE ratio is just over 12. So it's very much looking at bargain territory. No dividend. I think that's something the stock might bring in the future. This is something maybe you can get excited about. Well, once the growth disappears, if there is some more growth to come, I will expect this company to start paying a dividend at some point. So maybe a good time to buy in before the dividend comes. I expect the dividend will come to this company within the next few years. No guarantee, nothing's a guarantee, but I can see this being a company that will start paying a dividend. The assets, well, the total assets of this company is 74 billion, compared to the 58 billion in total liabilities, and this is a big concern for me if you're a PayPal shareholder, because it's absolutely gone up and up and up, and it was 34 billion in 2019, so the liabilities are going up, and that's a big concern for me. The assets have been fairly similar, but if it keeps going up, it gets closer to the assets, it's not a good sign. And free cash flow has been a bit of a all over the show, but lately with now a minus 350 million from the last quarter, which was 1 billion. And what they did with that money was over, I think about 1.2 billion was to pay down bad debt. So debt that was very high interest rates, they paid a lot of that off. So that's very, very good. That's something at least intelligent from the company that's done well. Obviously, they've got a new CEO, so that the new CEO is going to have to keep rocking, making this momentum continue, because their long-term debt is not that great at 10.5 billion compared to the cash flow that, well, was 1 billion not long ago. Not good at all. So long-term debt for me would be something I'd want to be paying off if I was PayPal. Get yourself out of their long-term debt. They obviously paid a little bit off, but they've got to continue to pay that off for more improvement for this company. Let's look at long-term debt at $10.5 billion. Yes, no, not long-term debt, sorry. Shares outstanding at 1.09 billion. So this is the one positive, well, not one positive, more positive, but this is a positive. They have not diluted you. They are absolutely continuing to buy back shares from the 1.117 billion. So it's not huge, but still they are slowly buying back shares, so you are getting a bit more of the piece of the pie over year after year after year. So that is very positive if you're a PayPal investor or looking to be a PayPal investor. But what can PayPal do? Okay, they've got to really work on getting the top line and the bottom line closer together, because that is, to me, have been a very much a weakness. I think they can get this bottom line up. If they can get this bottom line up to 20%, I think you're starting to really see this be more impressive for the companies. A long way from that. But if they can start getting towards that again, or even more, then I think people start getting more excited about this company going forward. So they've got to look away at cutting costs and improving their expenditure. Because one concern, obviously, is with all Crown credit at the moment is that they're starting to charge fees for these credit cards, and people are starting to just go, no, we'll use FPOS instead of using the chip. So that's just something that is a concern. But PayPal, obviously, all the online booking, but obviously their biggest issues at the moment to me are Cash App, Square are really dominating the space at the moment, and Apple Pay is at the moment not a big competitor, but it could be a big competitor because a lot of people like the Apple phone, use the Apple Pay. It's just simple, click, click, click. It's all on your phone, boom, boom, boom. It's going to be an interesting future with PayPal, what happens there. But yeah, I expect PayPal to be a stock that's with potential growth at current metrics. So let's look at the intrinsic value PayPal. Let's have a look at its intrinsic value. So if we look at PayPal, at the moment it's roughly $60 a share. The earnings per share, we're going to go to 4.95 with a growth rate of 5% and the bond yield, which is around 4%. We get an intrinsic value of 59 point. So 59.5. So at an expected growth rate now of 5%, you're looking at $95 a share. So from $60 to $95, it's already a 50% bargain there. Now, if you go for 10% growth, you're looking at $147 a share. So now stock is a double up. If you increase the earnings per share from 4.95 just to 7, for instance, you get to $208. So the stock is starting to go, hoo, 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 hoo. This is a stock you may buy. If you're looking really right now, in my opinion, on current metrics on intrinsic value, I'm looking in between the 5 and 10% growth, so saying a 7-8% growth. So I'd say the stock right now is roughly $120. So to me, it's 100%. So it's a 50% right. Boom, up you go. Thank you very much. So 100% on your money right now. No problem at all within the next 5 years. I expect it to be quicker than that, but clearly no problem at all with that sort of earnings rate. That's where the values are at. But we're in a warning that the danger with PayPal is it going away? That is the big question on PayPal. That's the danger sign of this company. Is it losing its market share? It clearly is to Cash App. They're going to have to try push back some market share to continue the role there. So to me, PayPal looks like a good steal deal at the moment on metrics now, but that's the worry you just have to think about before you invest into any stock. This is not financial advice. Do your own research before you buy into any stock. Invest at your own risk. But this company, PayPal, is a chance to maybe make you some decent money into the future. It's not going to be a game changer. Don't get me wrong. It won't be a game changer stock. At best, it's probably a 4x. But I can't see it being anything like a Tesla or any of the NVIDIA or the high-flying stocks of USD or Alpha Beauty at the moment. But this is definitely a stock that's nice, should be nice and safe. And especially if they add a dividend, it'll be a sweet little thing, and you should see it slowly creep up, just like Visa and MasterCard. Simple businesses continue to grow and grow. And the positive with this business is that the revenue continues to grow and grow and grow. If they can continue to do that and improve the net profit side, the stock is definitely a stock maybe for you. Thanks for joining me, Barry Charles. Remember to like and subscribe to the channel and share this video with all your friends. Have a great day out there.